Welcome to another video from Netpicks, and today we are going to discuss the hammer candlestick pattern. And straight up, let me tell you, just because you see one of these does not mean that you should jump right into a trade. And it comes in different words. You know, some people are going to use the term pin bar, but what we're really talking about is the hammer candlestick. And what really matters is the context. And we're going to discuss all that after we learn what a hammer candlestick is. And again, I'll be straight up with you. I am not a fan of individual candlesticks, but there are some patterns I do like. And in this free PDF that you can download from the link above and below, you can learn about those and how to trade them. And while you're downloading that, feel free to subscribe, hit the bell button to be notified. And let's move on. So what is it? It's basically a one candlestick bullish reversal pattern that you would look for when the price is declining. And some of the features of it are you have a small real body that closes in probably the top third of the candlestick range. Don't get too caught up in that stuff. The shadow is at least 2 times as large as the body, and I do like a longer shadow. If I'm looking at these, because that makes sense if you think about it, you know, price went further low, and when buyers stepped in, they're able to drive it up even further. So I like a longer shadow. There's almost no upper shadow. There can be a little one. The real body, it can close red, but when it does that, the hammer is not as strong as the one that closes with a green body. And if you think about that, we want our close to be above the open. And it's not too complicated. It really isn't. But what does it all mean? Well, price opened and the sellers stepped in, drove the market down. Buyers then picked up the pace, drove price higher past the opening price. Now, buyers were strong enough to hold the candlestick near or at the high of the day. Now, it's just a general explanation, okay, but there are a few ways that it can form. And as you can see here, it's not always as simple as just these sellers being totally overwhelmed by buyers with the lower prices being fiercely rejected. Okay, if you compare the two formations, you can see the one on the left, that move is more convincing of strong bulls. Now, textbooks, they're not going to show you that, nor will online gurus, but always be aware of what is hidden inside of the candlesticks that form. You can usually see that on lower time frames, obviously. What are some facts that you should know? There's nothing magical about the hammer or any price pattern or any indicator. There are some vital things that you should know before you trade them. When you look at a hammer, what you're looking at is a lower time frame retracement in the price. Now, they can appear anywhere on your time frame. The market can be going up, it can be going down, it could be ranging, it doesn't matter. They do not determine the trend direction. But where the hammer forms, that's what matters most. So let's look at each of those. Number one, lower time frame retracement. Now, I showed you a different way that hammers can form. So I want you to remember that we look for the hammer to form during a down move in the price direction, a retracement. So that means that in a downtrend, the price will move up to form the hammer. The higher the time frame, the more obvious this should really be. But on the lower time frame, we can see that price is just retracing. And what's interesting here is that the hammer came in around previous resistance that turned into a potential support zone. And if you went long, well, buying would have resulted in a losing trade. Number two, you can't tell trend direction. Now, from engulfing candlesticks to our little hammer candle, these are individual candlesticks. And if you look at the charts here, each leg in a swing has many candles, even more on lower time frame charts. So seeing a reversal candlestick and thinking that we're just going to see a trend change, it's wishful thinking. And you definitely want to use other means, such as an indicator or structure, my favorite, to determine the trend and the direction of the market. Third, the state of the market determines how we're going to use it. Is the market going up or down? Are we consolidating? Now, we should expect to see hammers form in uptrends, but in a downtrend, it does not mean that we're changing direction. Are we in a trading range? Well, we can use the hammer depending on where it forms. Now, if you just wait to find hammers for trading, you're going to be waiting a long time because they don't always occur. at potential turning points. So you want to keep that in mind of what we are really looking for. We are looking for a sign of a reversal. It could be a hammer. It could be an engulfing pattern. It doesn't matter. Any pattern that shows the balance of power leaning towards the buyers. Okay. So we want to look for a trending market. We can use a trading indicator like the 50-period moving average, use higher highs and lows to show an uptrend, doesn't matter. Price will retrace back into a prior resistance zone that's been broken, and hopefully it's going to act as support. Look for a reversal candlestick, such as our hammer. Okay, now this is a 15-minute Forex chart, and we can see the market is in an uptrend as shown by the price action and the moving average. The red arrow, that points to the hammer candlestick that's formed in an area of interest. The red line, that is a former resistance level, now acting as potential support. And as you can see here, the support held, so now it is support. So how do we trade it? Well, the setup occurred in an area of interest. The hammer, which shows us buyers taking over. But to be sure that they're taking over, we want to place our buy stop order just above the high of the hammer. We need to set our stop loss, and we do this via the average true range indicator. So think of using 1.5 to 2 times the 20-period ATR of price. You can use previous swing highs or multiples of the ATR risk for your take profit areas. The key is that we actually see a reversal set up while price is at or near an area of support. Now here's a bonus strategy, and if I'm going to use individual candlesticks, this is where you're going to see it. This is probably my favorite technique of all. So what rule does this one break? It breaks the market having to be in a trend. So for this strategy, I want to see price in a range, and I don't need a perfect looking hammer candle. So once you define the trading range, however you do it, look to the bottom of the range for support to be broken and then regained. I call these failure tests. The stop loss will go right under the low of the hammer, because if we are wrong, we are going to be wrong if that low breaks. Profits, take them at the top of the range. Now there's one more way to use this strategy, and I think you're really going to like it. If you are in an uptrend and price is pulling back, we want to dial into a lower time frame for your entry. Now once pullbacks end, very rarely do we see a V-shaped reversal. What we often see is a trading range form. Now, if we get a hammer, we are using the trigger, the break of the hammer high, as entry into the higher time frame pullback. Okay, so we're combining the bonus strategy where we get the poke below and regaining of support. What this will allow us to do is get into a trade long before the higher time frame shows a resolution of the pullback. So we are using a range to get into a pullback as an entry. And we use the hammer candlestick breaking the low of support and regaining as our entry. So, okay, let's wrap this up here. The hammer candlestick, it's a one candle pattern that you can use it to trigger yourself into a trade. Where we find it matters. So we have to look to support and former resistance levels to be tested. Do not use it as a trend determination tool. It's a waste of time. We can match the ranges and pullbacks together with the hammer for early entry into trades on a lower time frame. Now let me know if you use any type of candlestick patterns, and if so, which ones are your favorite. Hope you learned something here. And if you haven't subscribed, please do, and we'll talk again. Thanks for watching.